A strong recovery seen in the mid-cap index, and we have seen a couple of these stocks come back from the lows. CG Power is the one which is seeing a sharp rally from the lows. In fact, it's recovered about 5.5% from the lows. Done very, very well this week, up around 18% for the week itself. Got a dip. Bulls took it as a reason to take it higher. We have Pidilite too, which is at the high point of the day. There was a Credit Suisse note on Pidilite this morning. They've increased their target from about 950 to 1125, saying the worst is behind the company. Majority of their raw materials, remember, are crude linked. So we'll keep an eye out on all these individual stocks. Financials, of course, are buzzing. But one pack which is in focus right now are the PSU stocks. And that's on account of the CPSE ETF. Nimesh is here to give us more details on that. Nimesh?
Hi, Mangalam. So you rightly pointed out, most of the PSU stocks are down in trade today because the fourth tranche of the CPSE ETF is going to launch on the 19th of this month. So 19th is the date when the anchor investors can put in money, and 20 and 22nd will be for retail investors. Now, this is a ETF of 11 stocks, and we spoke about that in the morning as well. The biggest impact will come in the stocks like ONGC, IOC, Coal India, and BEL, and those four, 5 stocks are down between 2 and 3% in today's trade. Remember, there is generally a discount to retail investors in the ETF, so it is assumed that there will be a 5% discount for retail investors in this ETF as well. The government is looking to raise between 3,500 crores to 10,000 crores. So 3,500 crores is a base book, and they have a green shoe option of close to 6,500 crores. So net, if there is a strong demand, the government can raise up to 10,000 crores. It's a sizable book, but as I said earlier, in the morning as well, the biggest impact will come in the likes of ONGC, Coal India, IOC, and BEL, simply because the two stocks, PFC and RSC, which are part of the ETF, will not have a large weightage, simply because there is a merger which is proposed and which is likely to get end before the 19th. So the other stocks will have to bear a bit of a brunt, and maybe because of which stocks like ONGC, Coal India, and BEL are all down in trade today.
Yes, the Nifty PSE index itself, or the public sector enterprise index, is down 1.5%, and in the last 1 year, that index is down close to about 15%. Just a reflection of how the PSUs have done. Thanks, Nimesh, for joining in. As we wrap the show, Chartbusters, we leave you with some market opinion coming in from veteran Rhythm Desai of Morgan Stanley on the private capex recovery and the valuation. Stay tuned. Trading Hour is up next.
2 years. More capacity has got utilized in the private sector. So right now I would estimate, or I should say guesstimate, that utilization rates are in the low 80s. And another 2 years they'll be in the low 90s. Now it's a time at which capacity needs to come on stream. So sometime in the second half this year, post-elections, I think the private sector will start debating capex. And in 2020, I think we should get some capex from the private sector as well. The fundamental cycle is at the start of a new uptrend which could last for a few years. Valuations are somewhere in the middle of the zone, so there is upside there. And of course, there are near-term issues around elections. In 2019, fundamentals look like they're at the bottom, but valuations are not.